Hello, I'm Russell Poynton from Edison Group. Today, it's great to have with me again Dr. Dominik Benner, who's the chairman and CEO of the Platform Group. Thank you for joining me, Dominik.
Hey, Russell. Thank you for being here.
Great. Let's start off. You've just announced a new revenue target for next year of 1 billion euros. Can you talk about what's driven that increase in your guidance, please?
Yeah, thanks for this. Basically, we had a very good organic development. So our internal organic growth rate was above 25% this year. And we are quite optimistic that we will also achieve it for next year. Additionally, we made some acquisitions this year, and they will also contribute for the big revenue growth next year. So we are on a pretty good track with that.
Oh, good. Could you just talk about why the Platform Group is so good at growing faster than its competitors and is more profitable?
Well, it really is a result of our growth cycle, because our growth does not depend on the industry development. We are much focusing on partners, and partners means we connect local retailers and manufacturers to our 28 platforms. And that means if we get more retailers and manufacturers connected, we get more products from them. And if we get more products, we attract much more customers. And this is our growth cycle. And if we have a good numbers of increasing retailers and so on, so it automatically brings us on another revenue level. And that is the reason why we grow much faster and are much more profitable than other competitors.
Okay. And the e-commerce space is quite a busy space, and there are lots of companies in there, the likes of Amazon and Shopify. So would you just talk about what you think Platform Group's USP is, please?
Well, we do something which most competitors do not like. We connect small retailers and partners with different ERP systems in a nitty-gritty job and consolidate, aggregate all of them into our system. So this is really a difficult work. It's a very hands-on work, and it takes a lot of time, money, and resources. So I don't know any competitor who likes to enter this kind of business because it takes a lot of time. And the second thing is the ERP systems of our partner, they are from the 90s or at least 20 years old. So it's very difficult to work with them and to create all the content. So they have no good pictures, they have no good e-commerce content. And so we have to create everything by ourselves. And this costs a lot of money also. So these are two big reasons why other competitors don't want to enter this market. And that's the reason why we are pretty much alone in this market and work for so many partners here in Europe.
Right. And you operate across many industries. One of your largest is the luxury sector. So why is that so attractive to you?
Well, in the luxury sector, we have a pretty attractive markets because there are no real competitor. So if you are a luxury boutique, for example, for Prada, Versace, and Louis Vuitton, you have no real alternative. So we sell for thousands of boutiques here in Europe their products. We have a very fair price level. And now we already bought 5 competitors in the market. The one was for luxury watches, like Rolex watches. The other one was for vintage products, so vintage luxury goods. And the third one was a leading luxury platform in the Netherlands and in France. And so we're on a pretty good track that we combine these luxury verticals and create one big luxury universe with our platform strategy.
Okay. And for the Platform Group, there has been a lot of M&A. I think you've made 11 acquisitions so far this year. Is M&A going to be an important growth driver for the business going forward still?
Well, it really depends on the price level of these M&A targets. If we think that the valuation are getting up and it's too high, we will not buy anything. But right now we see really a downside development in the valuations, so it's quite attractive. And as a family business, we are very anti-cyclical. And that means we can now buy a lot of good companies for very reasonable prices. And so currently, I would say we continue next year and buy another bunch of attractive targets and integrate it into our group. But if we see other price levels, we would directly stop that.
Good. And through this year, as with last year, the guidance continues to go up as you make acquisitions and there's organic growth. What is your biggest fear about the next year, potentially?
Well, I would say we have the plan to enter the United States as a big growth market for e-commerce. And we think that our platform model is also unique there, and we could ramp it up there in a good way. But my biggest fear is that we make a wrong step or that we go too much into risk decisions. And this is something what I really fear because we don't want to lose money for our investors. So we have to be very carefully with that and don't be too fast and make wrong decisions. So that is my biggest fear for next year.
Well, hopefully that doesn't come true. So thank you for speaking to me today, Dominik.
Thanks, Russell.